All right, guys. This is your boy Toby. Welcome to season two of introduction to Trendline, to the world of Trendline trading strategy. So in this case, we're going to be to continue from where we ended last time, how to draw a valid trend line, which we discussed most of these outlines. But then we just go into straight into looking at the charts, so as to also know how to identify a moving or how to draw an exact trend line. All right, so we just switch over to our next assignment on this. Okay, so this is it, how to draw trend lines. It's identify obvious peaks and troughs. So in this case, here is a peak and then here is a peak. It's identify obvious peaks and troughs. Here is a peak and then here is a peak, and then peak here and then another peak here, and then this is a true, and then this is a true obvious peaks. So in this case, we just in case they ask you, okay, so put a trend line on this pinpoint or on these peaks. How would you draw it? Are you just going to draw from this to this? Are you just going to connect the trend line from here to here, or from here, or from here to here, or you're connecting from here to here downward, or you're connecting from here to here? How would you do that? All right, so let's look at our next chart and see how it's drawn. So here, this first and second peak is it. We use the first and second peak to draw the trend lines. So over here there is a first and second peak setup, and then first and second true setup. So over here we're just looking at what's going on here. Okay, so now we're waiting for this market for the price to bounce back to any of these trend line drawings to make it the third touch. Remember, you use the first and second peaks to draw a trend line, and then we use the third to enter a trade. So at this point we're just waiting for this price to either come back to this same level, to this same trend line hits, and then a sell trade will be executed. Or better still, when breaks from here, when the market comes hits on this, and then maybe probably creates a sell signal, and then we sell from there. Or better still, the market bounces back to this stronger trend line, and then maybe for some reason decides to bounce back again, and then a good sell will be valid at that point. So we're just going to flip over to the next page, so as you see how this trend line scale ups works. So this is the exact trend line scale up. So over here it says outer trend lines. This is outer, this is outer, and then this is inner trend line, this is inner trend line. Why are they inner trend lines? Now these trend lines are drawn inside the outer trend lines. Okay, so this is the reason for which they called this trend line inner trend lines. These are the reasons why we have inner and outside trend lines. All right, so we're just going straight to our next topic now. For most beginners, the confusion begins when they look at a chart and see too many lows and highs, and they just cannot figure out which two they are going to use to draw a trend line. So these are most challenges that a lot of traders out there are facing. They just look at the scale ups on the charts, and then they don't know, how would I draw this, how will I scale up this thing, how will I do this, how will I start, where will I enter from? So these are some of the facts that we are here to teach you guys. So all you do for me, please, is this your first time of meeting me? My name is Toby. Please hit on that subscribe button right there if you want to stay connected with what's going on right now. In this tutorial, we're going to be showing you how to how to identify a trend line that is not that is valid and which one that is not. And then most of the times too, we've come to discover that a lot of people find it very difficult to draw a trend line that is valid. As soon as they draw a trend line, whether it's valid or not, they assume that they have done the right thing, right? But there are trend lines that are not very valid in this system, and when drawn, that's where you find out that you place a trade looking at a particular level, and then at the end of time the market breaks the level and keep moving. How would you know a trend line that is valid and which one is not? Please, if you want to know that, please stay connected by clicking on that subscribe button right there, and then the notification button, so as to turn on to get notified whenever we upload stuffs online, whenever we upload new videos regarding this training. All right, so this is season 2 of this section of the training. We're also going to be looking at some technicalities here too. Now, for most traders, as I told you, the confusion is always there, and then when they look at now, just look at what's going on right now. Look at what's going on right now. We have too many highs, too many lows, and then they just can't figure out which of the two they're actually supposed to use in scaling up their trend line levels. So these are the challenges young traders are having out there. So in this case, the solution to this problem comes down to prioritizing which lows or highs to use, and the general rule is this. Now for lows, the one with more higher candlesticks on its left and right will be more significant. The one with more candlesticks on its left and right, the one with candlesticks on its left and right will be more significant. The one with more candlesticks on its left and right will be more significant. The one with more candlesticks on its left and right will be more significant. So this is what it means. We have one here, we have one here, we have one here. Now looking at this, you find it very difficult to identify something nice to be used in trading here, to use in making good trading decisions, and this is why this is very significant. So here, that's why you see this trend line scaled here, and then it works the same for high, except that is completely opposite. Okay, you should be looking for more lower candlesticks or more lower candles if you want to draw your trend lines. You look on that. So the chart here makes this concept a lot clearer, as you could see over here. It said there are 3 significant lows on the chart, number 1, 2, and 3, and notice that on each of these lows there are more high candles on both and left and the right side of the low, or which you see over here. There are more lows on each candles here, as you could see. Now the right side here, we have more trading opportunities that actually appears on this right side. So this is the reason why we choose to take our trades maybe probably when the market moves from the left, and after drawing the trend lines and then looking at our right again, we find out that good trade setups has scaled up, and that's why we execute our trades from. So in this case, in other words, you look for highs and lows that are easy to spot. Now let me explain further. When you select the 2 highs for drawing downward trend lines, or the 2 lows for drawing upward trend lines, they must be visible or obvious to everyone else, very visible or obvious. There should be no ambiguity, so everyone else must be able to see or spot them clearly. And if the lows or highs can be clearly seen and identified, that means that they are significant, because that is where the market has been observed to reverse significantly from. Okay, so at this level we just take our experience from what we're seeing on the chart. Now on the chart here, how many visible or obvious and therefore significant lows can you find? How many significant lows can you find? Actually, I see 1, 2, 3 significant lows. Okay, I see three significant lows. With this also, how many significant lows can you see over here? And then looking at the right up here at this article here, it said, can you show me which lows are obvious and significant? So if they tell you which of these lows are more obvious and significant, what are you going to do? Are you just going to point these, and just trying to make scaling of all these things you see? No, actually there are significant lows here that are very valid. Okay, so we're going to look at our next charts in order to know which ones are significant and obvious. As you can see over here, these are the obvious peaks, and then we look at the action here. Now this is where we took our trade from. This is where the trades are entered from. Remember what, as I told you from season 1 of this training, I told you that 1 and 2 of these peaks are used for drawing of trend line, and then the third, fourth, fifth, thereabouts are used for entering trade. So this is just most of the facts that we ought to understand. Now here is another one. Notice on the chart how the lows and are obvious, okay, and therefore easy to spot. You could see over here, very easy to spot because they are just in a single file. Very easy to spot. Significant, and the result is you get a nice upward trend line that bounced on the trend line drawn, and then the price keep moving up, up, and then continue to go up. So this case, you the trader, you have more advantage to the market. You have more advantage of making some money. Now the two lows where the trend line is drawn must be obvious and easy to identify. So you could see over here. So this just to like show you different examples of trade scale-ups or trade setups that happens, trade setups and patterns that actually happen in our trades. So if we are to actually identify or define what happened here, this is going to be like bottoms. I think these should be identified as bottoms. Okay, so but then we've done the scale up, the trend line scale up, so as to make it easy for us to get the exact entry points we needed to make a good trading decisions. So the two peaks where the trend line is drawn must be obvious and easy to identify. So it's same thing that happened at this spot, same thing over here. This is just like opposite of it. But then you could say that all you need to do is just do what the market asks you to do. The market says, okay, if I come test second and third, you just enter a trade, you make good profit out of this, out of just doing this obedient thing with the system. So the forex market, as you could see over here, is something that we all ought to understand how it works first before we venture into it. So, but I also noticed that many great trade setups occurs on trend line drawn from significant lows or highs, or from combinations of both significant and insignificant lows or highs. What can you say about that? Okay, so looking at these significant lows and highs, what can you say about these ones? What can you say about what you're seeing with your eyes? Now, if you are a beginner, to avoid the confusion, stick to only drawing the trend line and based on significant highs, peaks and lows, truths. As you gain more experience and confidence, you can start trading off trend line drawn on significant lows or highs, or combination of insignificant or significant lows and highs or highs. So you might just want to stick on drawing the trend lines alone to use it in making profit. So in this system, all we require is just please trying to develop that attitude of drawing trend line. I bet you're going to do very well in this. You're going to start making some good amount of money on daily basis. Just like this morning, I've made some good few $100 this morning, and then I'm happy with what has happened. So I just want you guys to please, if this is your first time of meeting me, my name is Toby again. Please try and hit on the subscribe button so as to get notified whenever we upload new videos that concerns this trend line trading strategy and the trend line breakout strategies, significant lows and highs, how to identify them, or how to spot trend line correctly, how to draw a valid trend line, how to know when trend line is still valid and when it's not anymore. And I tell you, there are trend lines that actually expires. That's what I'm trying to let you know. There are most trend lines that when drawn after some time, that trend line becomes expires. How does this happen? Now, a trend line expires when the trend line is not properly drawn at the right spot. All right, guys. So please let's continue. The next we're going to be discussing valid and invalid trend line. Okay, so we're just going to be looking at what we have next: valid and invalid trend line. Please subscribe to our channel, our YouTube channel. If you need more inquiries, may just want to contact us through using our YouTube channel, which is if you click on YouTube, write in Forex Trade Academy, you get to you have access to speaking with us. Okay, so these are trend line drones from significant highs. I think we should may just want to go back a little bit. So these are trend line drones from significant peaks or truths. Okay, and then it does take a bit of practice and skills to be able to draw inner trend lines when it comes to picking which 2 points to use. Now, the more you practice, the more you are likely to identify um, which trend lines are to be used and which one are not. Okay, so we're just going straight now. A trend line is valid as long as it is not intersected. Okay, the trend line is valid as long as it's not intersected significantly and the price continues to obey. As the price continues to obey it, and then a trend line becomes invalid when it is intersected significantly, and this could mean that the trend has now probably changed. So whenever a trend change, there's whenever a trend line is being intersected, I think significantly it means that either there is a change of trend. Okay, yeah, there is a change of trend. That's why we see that happen in most of our trades. How can you tell if a trend line is intersected significantly? Now, which could mean a trend line breakout or not. Now, sometimes we actually have what is called trend line breakout, but we're still going to teach it on the course of this training. Now, there is no exact formula to determining that, but here are three things that I look for. Now, one of them is the candlesticks that intersect the trend line. Has it closed above or below? So you have to consider all this. And then the two is the length of the body of the candlestick, if it is long or short, that's closed above the downward trend line and below the upward trend lines. So what is actually trying to explain now the three? Okay, let's just finish with the third one, then we explain. So the close, which is third one, I say the close of the 1 hour or 4 hours candlestick. Now I will explain now in details. Now the candlestick that intersects the trend line, has it closed above or below? It is a candlestick closes, if a candlestick closes above a downward trend line by a significant distance, then that may be a signal that the downward trend line is now violated. Yeah, so the opposite is also true for an upward trend line. If the candlestick loses or closes below it significantly, that may be a signal that the upward trend line is now violated and the price would now be heading up. Okay, so if a candlestick just intersects but fails to close above stroke below a downward stroke upward trend line, then expect trend line to be obeyed. So this is just it. So in other words, if a candlestick closes within this range inside here, I tell you, then expect the candlestick to obey and then fall back into the direction. Okay, so this is just how it works. And then the length of candlestick, I say the longer the candlestick length, or the longer the length of a body of the body of a candlestick, the that closes above stroke below a downward stroke upward trend line, the greater the possibility that the trend line has now been violated. Now notice, if you see that a shorter length of the body of candlestick that intersects the trend line that closes above below, or above below a trend line, this likely to be an indicator that market has to indicate, or an indication that market has lost the momentum, and even though it has intersected the trend line and may close above below it. Now there is a greater possibility that the price will continue to obey the existing trend lines. Now you would need additional confirmation, and the best way is to use a reversal candlestick more on that later. So this is the very reason why we like to, before ever we decide what's going to happen. Now whenever there's an intersection in this form, what we do is that we have to stay for some few moments. If that, let's take for instance this is a 1 hour candlestick, and then there's an intersection. All we do is just to please be patient to see whether the market will fall back into the trend line, into the trend line direction. Okay, when that happens, what are we expecting to be sure? We are expecting a reversal signal to appear here, like same way a reversal signal appeared. This is sell, reversal sell signal, and we expect a sell signal to appear here before we make our trading decision, in order not to make mistakes. Okay, so the close of 1 hour of and 4 hour time frame candlesticks are very important in determining if the trend line is likely to be broken or not. Okay, if you see a 1 hour candlestick close below an upward trend line, then there is a greater chance that that trend line is now intersected and price will continue to move down, if that be the case. Now the opposite is also true for downward trend line. Now generally the 1 hour trend line closes above or below a trend line, that closes above or below a trend line has more significance than any other time frame closes. Okay, so in this that is why on many occasions you see a trend line intersected significantly in a much smaller time frames, like the 5 minutes, 15 minutes, or 30 minutes, and you may think that the trend line is intersected, but then the 1 hour candlestick eventually closes. So we're just going to look at some other structures that we have over here that we need to treat over here, and then we now looking at what's going on over here. Let's now, what does this tell you? Looking at this chart, what does it explain? This chart, what does it explain? Now what can you see about the length? What can you say about the length of the body of the candlestick numbered 1, 2 and 3? Do you notice something, and what happened after that? 1, 2 and 3. What do you notice? Now over here, now to this direction, now we notice that the markets climbed from here and then moved to the first candlestick, and then moved another, and then the third one, and probably comes to a level, a trend line level, and then hits the trend line and then continues to come down. So we're just going to flip back a little bit to see what the result of that happening brought. Okay, so this the exact result, this is the result of that particular trade. So 1 2 3 over here, and then afterwards the market dropped down heavily. So these are some of the signals that actually happen. Now the first chart above, this first chart shows two very bullish candlesticks, 1 and 2, with very long bodies indicating a very strong upward momentum. Then three candlesticks is formed by contracts. Okay, it has a very shorter body than the first two, so we can we know the market is losing its steam. And the second chart also is what happened as a result of the three candlesticks that got respected over here, and then everything just starts falling in place, and then the market starts going in profit. Notice that this candlestick closed above the downward trend line, but notice that it lacked momentum. Shorter body, and the next bearish candlestick confirmed this. The trend line is obeyed once more. So in this case, you just go into, just look at what happened over here and then see how the market dived down. The market moved over here again, 1 2 3, and then fell down back again, and guys made a lot of profit out of that action. So in our next tutorial, we're going to be talking about the common mistakes that are likely to be found in drawing trend lines. Okay, so guys, my name is Toby again. Please stay connected. I love you.